Just a quick disclaimer. While this episode discusses wine as an investment, it is not investment advice. This podcast is for informational and entertainment purposes only. Now, on to the show. Do you have a wine collection or are thinking about starting one? Well, you're in luck. Today, you will learn everything you need to know about wine collecting and investing from Brian Ward, who has been in the collectibles industry for 14 years. Brian will explain how to start a collection, what makes a wine valuable, developing a strategy, keeping your wines safe, how to sell your collectible cases, and everything in between. This is the Inside Wine Podcast. I'm Joe Janish, a certified specialist of wine and wine industry professional since 1996, giving you insider tips to make the right wine decisions. And today our guest is Brian Ward. He is the Director of Wine and Spirits for Winston Art Group and also the Principal for the Cask100 Fund. So Brian, thank you so much for joining me today.
Thank you, Joe. I really appreciate you having me here today.
Oh, well, I appreciate you because you have a lot of knowledge about something I know absolutely nothing about, which is wine collecting and investing. So why don't you start off by just giving our listener just a little bit of a background on why you know so much about this space?
Okay, sure. So, as Joe mentioned, I'm with Winston Art Group, and what Winston does, it's the largest independent appraisal firm in the U.S. for really every category, 75 different categories. So art being kind of the main one, but I run the wine and spirits, and initially wine, but spirits has really come on in its own right. So I added that to my title a few years ago, but wine is really my focus. And, I come from more of a data standpoint. So I didn't come through wine through service as a sommelier, for instance. So I worked for a firm where my job was to go and find private wine collections for resale in the secondary market. And so while doing that, I realized just how valuable these wines were, not only just, the per bottle cost, but seeing that what the person paid for it several years before and what they're worth now really was something that very much interested me. So I started pursuing that concept of helping clients understand what their value of their collections were and helping them put together collections. So I moved in 2015 to Winston Art Group. And my main role there is kind of several different aspects, but doing appraisal work. So I appraise wine collections for insurance purposes, estate, what have you, doing claims for insurance purposes, those sorts of things, as well as doing a lot of consulting work where I, will help put together collections in terms of wine cellars and organizing them, but then also purchasing collections for clients and bottles and giving advice, as well as then when they're ready to liquidate, working with them to sell off those collections. So really pulling those pieces together. And then the Cask100 piece that you mentioned is something that I really started seeing the value of all these wines and collections. And I realized that there's a lot there to be said for putting together a wine fund. So we started this wine fund about a year ago. Hopefully that's a good enough overview for you and your listeners, but that kind of gives a good example of exactly the different aspects of what I do and how I do them.
I don't really know a lot about wine collecting, but I know that people collect wine. Now, like taking this to a whole nother level of investment, that's where I'm forget about it. That's why you're here. But why don't you start out with just telling us a little bit about, wine collecting, how people get into it, how you might start it, maybe give us a little overview, and then we can talk a little bit about investing, because sort of the same thing, but not really the same thing at all, right?
Yeah, absolutely. There's two different ways, right? Are you collecting more for enjoyment? Are you collecting for pure investment? Or are you collecting for a combination of all those different things? So just to give a real quick history lesson on, the wine industry and collecting in general, I won't go back too far, but wine collecting was really focused predominantly on Bordeaux. So Bordeaux is in France, and that was the main collectible wine up until about 2008. And the reason up until about 2008 is because that's when the recession hit worldwide. It took about 2 or 3 years for it to really affect the wine market. And the main reason of that was because Bordeaux being that top wine, it was collected mainly by the Asian market. So China was doing the majority of the collecting of Bordeaux, and the reason for that was because the officials in the Chinese government did it as gifts, did it as banquets. So that just goes to show how much wine that the Chinese government was actually purchasing. And in 2011, the recession hit China as well. So it took a little bit longer. So austerity measures were put in place. So the Chinese officials could no longer purchase these wines. So they dropped almost overnight. As an example, Lafite, which is one of the first growths of Bordeaux, went from basically, for some of the top vintages, from $5,000 down to $2,500 within just a month or two time frame. So it was pretty significant. But what that did was open up the world to collecting, so meaning different regions. So no longer was it just Bordeaux, but it was Burgundy, Champagne, Italian wines, California Napa wine. So it really opened up the world to collecting. And, how do people get into collecting, right? Obviously, they enjoy wine. But typically, when I work with collectors, what I often see is that they start in one region. They go on a trip to Napa. They go on a trip to Italy somewhere. And they go to Napa and say, oh, man, I tasted all these wines. And they have a few too many probably. And they get on the mailing lists, right?
Yep, the mailing list. Yep, the club.
You've probably done the same thing, right? You're like, oh, this is awesome. I want a case of this. I want a case of that.
Yep.
And then they get home, right? And a couple months later, all of a sudden they get all this wine. But that kind of really kicks them off for collecting. And a lot of collectors in the U.S. really start in Napa, so that's kind of the main reason why they start collecting. But inevitably, they explore outside of Napa and go to France and, deal with Bordeaux. They try Italian wines, and ultimately the serious collectors end up with Burgundy, and Burgundy is kind of the king of all collectibles. So the serious collectors that I work with often have Burgundy as their main collection over a period of time. So that's the trends that I see. And the five top regions are France being by far the biggest, but within it, Bordeaux, Burgundy, and Champagne, as I mentioned. Italian wines are doing really well, and then Napa. Beyond that, of course, you can collect with Spanish wines, some Australian wines, some South American wines. But in terms of true investment value, those are the five main regions.
All right. And like when you're talking about Italy, you're talking like Super Tuscans, Barolo, Brunello, that sort of thing.
Exactly. And you just, you kind of nailed the main ones. When you're collecting Italian wine, the Super Tuscans, the Barolos, the Barbarescos, and then the Brunellos. Chianti some, but Chianti really has not taken on really yet. I mean, there's some really nice Chiantis, obviously, for drinking, so there's great value Chiantis out there, but in terms of investment, they really haven't, done a whole lot yet.
And is that mainly because the perceived longevity of a wine? Because Chiantis, I mean, sure, there are Chiantis that can go for 20, 25 years, but Sassicaia, for example, could be good for like 30. Like, is that the reason why they have a higher value?
That's part of it. There's also a lot of perception. Chianti, if you look back, if you remember, right? I don't know how old you are, but I remember when you would go to any Italian restaurant with the red checker tables, and there's the basket of Chianti with the candle sticking out of it, right?
The fiasco, right?
Yep. And then you would be served that if you ordered a Chianti, and unfortunately, that's when the U.S. market really knew of Italian wines, and it was, for the most part, not a very good wine. So even though Italy has made wines a lot longer than we have here in the U.S., in terms of modern Italian wines and being a really high quality investable product, it's almost the same timeline as the U.S. from the 60s, 70s, and 80s. And so Chianti, unfortunately, still has a little bit of a stigma about it, not only here, but worldwide because of that. But as you mentioned, also, Chianti does not typically age near as long as like a Barolo or a Barbaresco or the Super Tuscans, as you mentioned. So there's a few reasons why Chianti hasn't been there. There's some that certainly are, if you look at like what Banfi has and some other producers, there are some nice Chiantis out there. But I typically tell clients to focus on the ones that you mentioned.
So basically, it's because LeBron James doesn't have it in his cellar and is tweeting about it.
That's right, LeBron and Dwayne Wade and his whole crew there. And it's interesting just the effect that celebrities have on these wines is amazing. And not only that, but everybody knows the story of the movie Sideways and Merlot being derided in that movie, and it still affects it today. When you talk to people that really don't know wine that well, when you mention Merlot, they go, "Oh, I don't like Merlot." Really? Have you ever had a Petrus or a Cheval
Exactly.
Blanc? You might change your mind in a hurry. So you're right, just that the perceptions, and so that's, I think, also why Chianti struggled a bit, because of that perception, and it's very hard to shake in the market.
Yeah. So let's talk about, for our listener who like maybe has some dollars to spend, really likes wine, likes to drink wine, has a nice little cellar. Like, well, first of all, like if you have something that's collectible, how do you, you can buy it, but then how would you sell it if you wanted to like sell? Like, who are you just going to put it on eBay or something? Like, how are you going to sell a wine that you think has some value?
Right. So, there's a few things to that. And one, if you step back a second and say, well, what makes a wine valuable?
Sure.
So there are really five main things that I focus on. There's certainly more aspects to it, but there's five things that I really focus on. And one is scarcity, rarity. That's extremely important. As an example, a California wine, Screaming Eagle, that's kind of the cult Napa wine. Only 400 to 750 cases are made per year, and Screaming Eagle sells for $3,000 to $4,000 a bottle, compared to Opus One, which everyone knows Opus One, but there's 25,000 cases made per year, and those bottles sell for $250 to $350 a bottle. Still a lot of money for a wine, but it's a huge difference. So scarcity really is number one. Another good example is Domaine Romani Conti, which is the kind of the king of all wines. It's a Burgundy, red and white, and it's the Pinot Noir grape. And Domaine Romani Conti, even the new vintages sell for $10,000-$15,000 per bottle. And that's because also, more than just rarity, but only 400 to 450 cases are made per year. Where Lafite, I mentioned earlier, is a first growth. It's a Bordeaux. It's one of the greatest wines out there, but 20,000 cases are made per year. And, Lafite sells for $2,500 to $3,500 a bottle on the higher end for the really great vintages. So scarcity is extremely important. The producer quality is extremely important too. So just having that recognition, that name, because there's 100,000 different winemakers out there in the world, but only 1% of them are truly collectible. So between 500 and 1,000 wines out there are considered investment grade at most. So it's really important to have that pedigree and that name. It's hard to break into it. Super Tuscans are a good example, that they feel new, but they've still been around since the 70s, Sassicaia, or the 80s. So the vintage is extremely important. You could have a good vintage or a bad vintage. In 1982 in Bordeaux was considered one of the greatest vintages ever. So, going back to Lafite, those wines are still drinking very well to 2045. So, another 20 years of drinkability with those, and sell for $2,500 to $3,000 a bottle, compared to a 1983, which is the following year. And it had much lower scores because it was a really wet vintage. Those wines have been past peak for 10 years and still sell for a fair amount, $800 a bottle. But relatively speaking, it's really different. They don't have much investment value, right? Whereas the 82 still does. So, then you look at critic scores and drinking ranges. And so there's a lot of components that, collection, when you're looking at bottles that you do own, understanding exactly what you have and making sure that you're not selling it too late as well is really important. But, to answer your question, how do you sell it? I work with clients, so a broker, someone like myself, a consultant, is probably the best way to do it, because trying to go like eBay, you're legally, as a consumer, not allowed to sell wine, right?
Right.
Which I know very well,
Yeah.
that you have the 3-tier system in place. So, it happens all the time, as we know, where you sell a case of wine to your buddy, but legally that's not supposed to happen. So, you look at auction, of course, and there's kind of 5 main auction houses: Sotheby's, Christie's, Acker, HDH, and Zacky's. Those are kind of the 5 top houses that are selling wine, and Bonhams as well, to add a 6th. And that's a great way to do it, but they look for kind of minimums, right? So they don't want just a single bottle. That's where you would need to work with a consultant that can source that if you just have a case of wine or a few bottles. And then, of course, you could work with a retailer that sells on the secondary market. So you really need to work with a professional, long story short, to sell off a single bottle, which I work with single bottles if it makes sense, all the way up to, $1 million plus collections.
So let's go back to starting a wine collection, because you're talking about some numbers that are way out of the
Yeah.
stratosphere. I don't think $15,000 for a bottle, even $800 a bottle is
It's
kind
a
of
lot. Yeah.
kind of hefty. Like, is it possible to get started in collecting at like a lower, like a $50 bottle or an $80 bottle, or is that really not making a lot of sense?
Yeah, that's so when I work with clients on starting a wine collection, if they're starting from scratch, what are their goals, right? Are you wanting a collection to enjoy, to sell, to a combination of both? And then what's your budget, right? To your point, because if your answer is, well, I want to invest in wine and sell it in 5 years or 10 years or whatever it may be, yeah, $50, $80 really isn't going to cut it. So you need to, $250 to $500 is kind of a minimum for, per bottle. So if you look at that, say my budget is $10,000, which is a lot of money for a wine collection. But if you're looking at $250 per bottle, that's only 40 bottles. That's not even 4 cases of wine. So you kind of have to understand what you're trying to accomplish. As an example, with Cask100, with our fund, I just purchased, it was a great buy, it's amazingly, but a $64,000 case of Domaine Romanée-Conti, a kind of a mixed assortment case. So one case is $65,000, which is a lot of money, but that your budget, it goes into one case of wine. So it's easy with wine to, you build this wonderful cellar, you've got 1,000 bottles, and all of a sudden you look and there's 40 bottles in there. It doesn't look that impressive when you get started. So when I work with clients, understanding budget, and no matter what their budget is, you can work with them, of course. And I often suggest 3 tiers of collecting. Your everyday wines. What do you enjoy? What wine is meant to be drunk. It's organic. It continues to age in the bottle, so it changes. So it's really a passion to be able to purchase a bottle that has some ageability or a case and try it over a period of time to see how it changes. So I suggest, get wines that, break up your budget into sections, into tiers, and get wines that you wouldn't mind sharing with Uncle Larry when he comes over for Thanksgiving, right?
Exactly.
Then your second tier is kind of wines that have aging potential, but you still don't feel guilty about drinking. And those are the wines where maybe you buy 2 cases. And, as I mentioned, you taste it and see how it's changing and really enjoy it. And then hopefully if it did well at the market and you sell off that second case, you paid for both of them. So, you're in good shape there. And then ultimately is kind of your investment ones where you don't want to touch those. I mean, you could obviously, but you don't want to touch those. Those are the wines that, we're looking at from trends and we think they have potential to go up in value. And you set those aside and put those in professional storage, which we can talk a little bit about that aspect of it as well. But those are the ones that you really want to not touch and put aside. And that you can do over time. So if your budget is 10,000 now, but you think, every year you can add another 10,000, then great. Then you can slowly build up that collection.
Yeah. So it sounds a little bit like buying an old car, an old vintage car. Either do you want to drive it every once in a while on the weekend, or do you want to just like throw it in one of those storage garages and wait until its value goes up?
That's right. That's exactly right. And wine's very similar. Whiskey, I mean, whiskey is that's a whole new world in collecting. So that's a whole different category. But yeah, with wine, and when you do purchase, you want to purchase in case quantity. Because if the intent is to sell, there's certain things that if you do take it to auction, which is most likely the best, option when you do go to sell an investment collection. You want to buy it. It's called OWC, the original wood case, which makes it more valuable. Things like DRC, if you do have that big budget where you can spend $60,000 on a case of wine, it's banded, meaning it has an original band around it. So these are all important aspects, purchasing wine. Provenance, like art, what's its history of ownership? Wine, it's just as important. So that's why also with this fund, for instance, we're purchasing newer vintages. And wine is kind of relative with newer, like 2000 to me is kind of a newer vintage. But, purchasing newer vintages allows you to have a much better understanding of where it's been. And then also you have to think about storage, and that way, so 1961 Cheval Blanc is one of the great wines out there. And speaking of the movie Sideways, that's what he was drinking at the end of it in that McDonald's cup, if you remember. But which again
It's
was
Merlot.
100% Merlot, right?
Yeah,
Yeah,
it's hilarious. That's the irony, right?
yeah, that's the irony of that movie, which was great. That's a great vintage, but it's much harder to understand how it's been stored by the previous owner. They could tell you anything, and if it looks good, but if you go to sell it and Sotheby's or Acker, whoever asks you the history of it, you have to let them know that you may not know. So having that very good track record of how it's been stored as well is extremely important to the provenance.
Okay, so if you want to buy a case for a collection, I didn't even think about the detail about the wooden box. So if you have a wine that's in a cardboard box, it's probably not a collectible wine.
I mean, well, that depends. It depends. So that's called, so OWC is the original wood case. OCC is original cardboard case. And some great wines actually do have their wine in cardboard. I was just offered a Chateau Reyes, which is a Chateauneuf de Pape, and it comes in kind of a nondescript cardboard box, and that's just how they sell it. But for a case, it's $35,000.
Whoa!
So so I'm not buying that one, but it's it's a great wine. So as long as it's in its original packaging, whatever that may be, that's kind of the important aspect.
All right. So it's like the baseball cards or the Star Wars figures. You want to keep them in the package. You don't want to take them out.
Yeah, that's right. Man, I wish I still had my Star Wars figures. Even outside of the packaging, they're gone though. I don't know where they went. I think my mom got rid of them. Who knows?
Same here. They got lost in a basement or a move or something at some point. Who knows?
Exactly. Yeah. And then the baseball cards, the same thing. I was like, I'm going to be rich one day with these. And they're gone.
Yeah, I remember buying a pack of a whole bunch of Greg Jeffries rookie cards.
Yeah.
Which were not worth anything now, but at the time we thought they'd be worth something.
They sounded exciting. I was looking through my dad's basement looking for like that Mickey Mantle card, but no, never found it.
Are there any like up and coming regions that might have some collectible value that you think like somewhere in South America or other places of France? I mean, you mentioned Chateauneuf de Pape. That wasn't even on my radar, but obviously they have some nice wines and. Obviously the Rhone Valley, Hermitage, those type of things. But are there up and coming regions that you think might have some value down the road?
Yeah, that's a tough one. As you mentioned, Rhone Valley, I mean, that's not necessarily up and coming, but that's one that's always kind of been on the fringe. And, there's certain ones, like I mentioned, that Chateau Reyes and, Beaucastel, there's some really nice, and the Hermitages that you mentioned, those have their Syrah and Grenache based, right? So they have a lot of ageability. Australian wines, Penfolds, Henschke. Right now, I'm not, just because where we are, by the way, we talked a little bit about the history of, collecting and where the market is, but during COVID, the market went through the roof, as people sat around and drank through their cellars because they weren't out. Yeah, they weren't out at, restaurants and things like that. So, and they were bored, and the wine auction houses did an amazing job of getting online very quickly. A lot of them already were. So people just started buying stuff, sitting around, with nothing better to do, and they weren't spending their money. So why not spend it on wine? And so the market really went crazy. And once COVID settled down and the world opened back up, there's been a bit of a correction where champagne went up 30, 40%. It's come back down 20, 30%. And so it's been a really interesting correction, mainly across the board. But it means it's a soft market. And so it's a great time to buy. If people are interested in collecting, this is the time to start buying and focus on the known wines. So that's why I'm not focusing yet on the up and coming wines, but I look at, Penfolds, which has been around for a long time, since I think the 50s and 60s, but as a region, as a collecting region, is kind of starting to take on. Spain is another one, Vega Sicilia, that's an amazing wine. Pingus, but there's not a lot yet, right? So there's, if you look at Australia, there's 3 or 4 wines that you really would want to consider investing in. Spain, there's 3 or 4 or 5 producers that you would want to consider. South America does have some, Catina Zapata is a great wine. But in terms of other regions, well, I would say Germany. I didn't mention Germany, but Riesling, some of the older Rieslings, they have such ageability just because they have some of that sugar content and they can last forever. So, if I was looking outside of the regions we already discussed, I would look at Australia, Spain, and then Germany. But beyond that, there's not a whole lot yet that I would feel comfortable even investing in right now.
Okay. Interesting. So it's funny you mentioned people drinking up their cellar. We actually I did an episode with Ray Isle of Food and Wine on why you should drink your cellar, and it was during the pandemic. It was in 2020.
Yeah.
Episode number 9. If you want to go back.
I'll check that out. And I mean, I did the same because you're sitting at home and you're working at home and, you're on these interminable Zoom calls, and
Yep.
you're like, oh my gosh, I might as well have a bottle of wine after this. And then all of a sudden at the end of COVID, you look in your cell and go, oh boy, I gotta restock.
Got to restock. Yeah, I got to restock. Absolutely.
Exactly.
Absolutely.
And, wine's organic and it's meant to be enjoyed. So, I don't want to go. I'm not beating the drum of collecting wine for investment only. Of course, that's a great thing to do because it's an alternative asset, and we've had a lot of success with it. But why? Even with Cask100, we have this club. Kind of in parallel that people say, well, it's great. I'd love to invest in what you're doing, but I also want to drink it. So we're out there sourcing for them a lot of the same things that we're buying, and even ones that are like $20, $30 bottles that we just think are really good and really cool wines.
Yeah. Again, it goes back to the old car. Like if you have a 65 Corvette and you never take it out of the garage or you never take it out of storage to drive it on a Saturday afternoon, what's the point, right?
Yeah, exactly. If you can't enjoy it other than just looking at it and picking up the car cover and looking at the bumper every once in a while, it's not quite as good.
All right. So let's now take it to the next level. Investment. So this is where I never even realized, I shame on me. I'm in the wine industry. I should know that there are actually wine investment funds, but it's something that really kind of blows my mind. So I'm guessing if you want to invest in a wine fund, it's just mostly because you want to just have a more diversified portfolio, or why do people do this?
Right. So our fund is, investment grade. It's registered with the SEC for accredited investors, and it's technically registered through the Bermuda Monetary Authority, but meaning that it has a great deal of oversight. We have a lot of checks and balances in place. We have to follow all the SEC regulations for, filing all the paperwork and being extremely transparent. So to answer your question, it's really an alternative asset class, right? So it's something to add to your portfolio where wine, for the most part, and spirits and whiskey specifically, doesn't necessarily correlate to the typical market. So during COVID, we were talking about that when the Dow Jones and the Nasdaq were going way down, the wine market was going way up. So it is correlated on kind of a macro level, but not on that one-to-one level where it does what the Dow does or the Nasdaq or at the up and down. So it's something to hedge a little bit against when the markets are down. So, and it's really, quite honestly, I think, of course, because I'm in the industry and it's my fund, but I think it's really cool. It's kind of fun because what we're offering clients and investors that like wine, but maybe they're not our typical client is not someone that has, a 250,000 plus wine collection or whiskey collection, because they're kind of like, I've already got my own fund in essence, right? Ours is that collector or someone that's interested in wine and they can't go out and buy a case of Domaine Romani Conti, or they can't buy a barrel of bourbon. They can't do all these really interesting things, where we have this fund that hopefully will get to roughly $20 million. So it's going to have this huge diversity of wine, whiskey, and whiskey casks. So that's one real benefit of why you would do that. There are other funds out there in the US and worldwide that do it a little bit differently. They're not a typical fund, but what they kind of are is more of like a concierge service where they'll say, give us $100,000 and we'll put together a portfolio for you that we think is going to do well. We'll store it for you. We'll do all these things for you, but you actually own the wine. So it's not like a share, that you would purchase a stock, where our fund is more like that. Unfortunately, I just mentioned that DRC, you won't ever get to drink it because we're going to sell it at the end of the fund, and give you the returns on that. But as I mentioned, we have that, kind of that club concept where we will offer wine. We'll offer cool trip opportunities that you wouldn't be able to get anywhere else, and tours and things like that. So, it has that alternative asset class to it. It hedges against inflation. It hedges against ups and downs of the stock market, but also it's kind of a cool aspect, I think, personally. So those are the main reasons I would think people would be interested in these sorts of funds.
I guess it's kind of like if you're feeling like not too confident in whatever and you normally would invest in, it's like, all right, so I'm going to buy some gold or a gold mine thing or something like that. It's just like an alternative. So is this available to the average person, or do you have to be like a special kind of investor?
Yeah, for our fund, you have to be an accredited investor.
Okay.
And, basically what that means is that you either, there's a few qualifications. One, you have to have just a certain net worth. Which I think is $1 million in investable assets. You have to make, I believe, at least 250,000, or this kind of or 250,000 annually. Or if you're, a broker and you have a Series 7 or a Series 6, you can consider yourself an accredited investor. And so the minimum is 50,000 to invest in our fund. We just did our first close last month. It was 10,000 to kind of get kicked off, but now it's 50,000 moving forward, and we're actively purchasing. We're doing, and which is the fun part for me. Now I get to go out and buy all this amazing stuff and be like, wow, this is like, I'm like a kid at Christmas, just going out and fulfilling all my dreams. It's pretty amazing. But some of these other opportunities that I mentioned where you work with a consultant to buy a collection for you, no, you don't have to have any qualifications for that at all.
Okay. So let's talk a little bit about this fund and how, again, it just blows my mind how this works. So Cask100 holds the cases somewhere, and I'm assuming in some kind of nice storage, and it's all like piled up somewhere, and like, how does that work? Just in piles somewhere.
Piled up. Yeah, it's just in piles. Wherever. Right. So as I mentioned, it's very regulated. So we go through a very detailed process. So as I mentioned, we're purchasing now. And so I get offers from all over the world where I don't buy at auction, or I typically purchase from just brokers and wholesalers that I work with that I know I can get prices at or below auction prices. So I'm really into the obvious concept of buy low and sell high. So, it's no different from stocks in that case. But then I also work with an exchange called LiveX in London, where you have to be in the trade, but you can get really great wines and whiskeys they're starting to do as well. But anyway, the process is I'll put together a list of wines or whiskeys that I think we should purchase, and then it goes through a valuation committee. And on our committee, we have his name is Charles Curtis. He's a master of wine. So he's really been out there, and he helps me through the whole process. We have a gentleman in the UK that Guy Roper is his name, and he is kind of our whiskey expert. So it goes through this committee first, and they'll tell me, no, Brian, that's not a good one, or yes, that's great. And so then I narrow it down, and then goes to our board for approval, and then it's paid. And once it's paid, we then store it to go directly to your question. Here in the U.S., we store in New Jersey with one of the better storage facilities. And then in London, we also store in a bonded warehouse. So wherever we purchase it is where it stays. So if we purchase it in the U.S., it goes to our New Jersey warehouse. If we purchase it overseas, it goes to the London bonded warehouse. So and it's a custodial process. So everything, has to be very well documented from the minute we purchase it to the minute it gets to the warehouse. And everything's put on the blockchain too, which is kind of cool. That's one of our partners. So we create a portal where if you're an investor, you can go into this blockchain portal it's not like NFTs or crypto or anything like that. It's more just to show that, hey, we did buy this asset and here are the details about it.
Interesting. So now, all right, you have all these cases of wooden cases, mostly of wine. You bought it at a certain value. Is there like a wine stock ticker like there is for the New York Stock Exchange, or like how do you know what the value of the wine is? Where does that price or that value come from?
Right. So as I mentioned, I'm an appraiser. So on a quarterly basis, I internally will value the collection. I know that's a conflict of interest in the sense that that's not like our end value, but annually we have it audited by an outside appraiser. So that's the value that the auditor and our administrator looks at. But there's a lot of sources out there. I mean, Wine Market Journal is a great source that aggregates all of the auction prices. So you can look up any wine and see any auction price, both hammer and then hammer plus premium. There's also the same for whiskey. And then from a retail standpoint, you have Wine Searcher, which aggregates all the retail. So there's so much data out there. And that's one of the nice things with collecting wine and spirits is that, as I mentioned, even Domaine Romani Conti, 450 cases is very small in the world of wine, but that's still 5,000 plus bottles out there for any given vintage. So there's a lot of comps. So it's relatively easy to value these collections because we're also selecting wines and whiskeys that have a lot of liquidity and have the trade quite often. So that's something that I offer. These valuations on an ongoing basis, but then, as I mentioned, to make sure that we're doing the right way, we have an outside source that actually does the appraisal on an annual basis.
Got it. Okay. So I'm definitely not someone who can invest in this, but our listener might be. So like walk us through this. How would someone like get involved in this fund and like what are the steps and then what does it look like once you're invested?
Right. So it's a relatively easy process. If someone is interested, I would just get on the phone with them, talk to them and understand their goals and what they're trying to accomplish and make sure that, in fact, they're accredited and they meet our minimums and those sorts of things. At that point, I would share with them our subscription agreements. So it's very similar to, if you're investing in anything, stocks or a company or things like that, you go through this process. So they would fill out the subscription agreements, which, is a little bit of work, but not too bad. There's something now that any investor is pretty familiar with, I think. It's called KYC, which just means know your client, and then AML, which is anti-money laundering. And that's very simple, just to make sure that they are who they say they are. So we need an ID, a passport, something like that, and then proof that they actually live at the residence they say they do. And so it's very simple. At that point, they would invest the funds themselves into the fund, and they're now an investor. So it's pretty simple process and ongoing. For instance, we have a webinar tomorrow night on April 4th, actually, where we're going to talk about our investment strategy, some of the things we've purchased to date, kind of what's next. So we would constantly give updates to our investors. It's a 5-year hold period, meaning that you cannot sell off your shares over that 5-year period until we actually close out the fund and it's all liquidated. However, we will start selling in year 3, depending on what's going on in the market. So, if we purchase something today, casks, I mentioned, we're purchasing a lot of Scotch casks and bourbon casks, and those have a lot of potential to go up in value. And we decide we want to liquidate some holdings, we'll do that. And those go directly back to the investors. So there is some liquidity in that process, but they'll receive, just like they would for any investment, statements showing how much their values are worth, their shares are worth, what we have in holding. I mentioned that portal that they can then access to kind of look around and get a little bit more detail. So, and then, we'll make offers on wines and whiskeys and experiences and things like that to try to make it a little bit more fun as well.
Okay. So if I'm investing in the fund now, and so I assume I can go to like some kind of a dashboard online and be like, oh, look at that. I own some Sassicaia. I own a piece of La Chapelle from Chabelet.
Right.
So that's kind of cool. And I can tell my friends, right? I own a piece of that.
I own a piece of that. Yeah, exactly. I own a piece of a Bruichladdich cask that's worth $50,000, and maybe we'll bottle it someday, which is something we've considered, which would be really cool for investors. Is one of the casks we might actually bottle and have our own custom label and give it out to investors and things. So you might actually get to have a piece of what was in the investment in some way.
That's a cool thing. Now, do investors have any voice in what you're going to invest? Like, can I say, hey, you need to, get some, Umbrecht from Alsace, or you need to buy up some more Tattinger champagne or anything like that? Or is it just kind of like the investor just kind of stays quiet and sees what's happening?
Yeah, I mean, of course, we're open to anything, but we ultimately make that final decision.
Got it.
And we also share a lot. We're very transparent, but we also don't want to share every little detail either. Like just because then you start getting that kind of too many chefs in the kitchen concept where everybody has input. I just had this really awesome wine at such and such restaurant. Have you ever considered investing in that? So. Yeah, but again, we're very transparent on what we're purchasing, so at least investors can get a good feel for what's in the portfolio.
Got it. And so what kind of people are investing in the fund now? You talked about, some older people, probably not because they have their own wine collection already. Is it younger people getting into this? Are these like hedge fund managers on Wall Street? Like who's getting involved in this?
Yeah, it's kind of a mix. It's been interesting seeing, the mix. It is definitely your typical older investor still that likes wine, may have a small collection, but enjoys drinking wine or whiskey, and so they're looking for something as an alternative asset class. But I've seen a lot of younger investors that are in the financial world in some capacity, and so they may work for a fund, but that fund that they're working for has a minimum of $250,000. So they're looking for other interesting funds that they can invest in for the $50,000. There's still a lot of money, but it's much lower than what their fund is. So that's something I didn't expect, but I see a lot of that. But yes, the younger demographic is a lot more open to these things, especially we're careful with how we really discuss the blockchain component just because crypto had such an ugly
Exactly.
downturn recently.
Sure.
But we're starting to see that it's something that potential investors, especially the younger demographic, really appreciate just because it is kind of it's a token. It's not something that you can share or trade or anything like that, but it just gives a lot more credibility. And those that understand the blockchain appreciate it. So it is attracting a younger demographic as well.
All right. So this is for the cool kids then.
It is. I didn't want to say it like that, but that's kind of the thing.
I said
it's
it for you.
cool kids.
It's okay.
I
said it for you.
If you're cool, you want to invest in this. That's basically it. Yeah.
All right. So let's get to the deets. If somebody wants to invest, to tell us how to get involved. Where do they go? What's the website? What's the email? How do we get in touch and do that?
Right. So the easiest way is to go to our website, which is www.cask100.com. And if you go there, it's a very simple website, but it's, kind of, I'd like to learn more. And you put in your email information and you receive an automated email with a link to kind of a package that, is our slide deck, the subscription documents, some of the press that we've been in. But you're more than welcome to also email me directly. And this is kind of I have so many email addresses, but this is the one I use a lot, is my last name, Ward, Ward, at Wine Advise. So it's WINEADVISE.com. So I'll receive that. But going to Cask100 is probably the easiest way because we track all of that, and there's a lot of auto emails generated and things like that.
Got it. All right. Any last minute tips for the wine collector or investor?
The one last thing to consider if you are collecting and you create your own collection is think about the costs associated. So that's something that a lot of collectors don't think about. So you want to insure your collection, right? You want to have storage. I recommend that, store it in an all-site professional facility if you can. A lot of collectors want to have kind of their vanity collection at home or their drinking collection, of course, which makes sense. But those wines that are really cool, like some first grosser things, have the majority of it if it's a true investment collection off-site, because I have horror stories of, hurricanes down in Florida where they had generators and all this great backup, they thought, but they had to evacuate, and it gets very hot after hurricanes down there, and then their generator dies. And so I've gone to, $500,000 cellars that the wines got so hot that the corks have popped out and they're, leaking all over the floor.
Yep.
Or people that purchase these amazing collections and they use just a little AC unit to cool it.
Yep.
And, when you go to look at the collection to potentially sell it, there was crates of DRC that had been open, maybe one or two bottles had been drunk, but also squirrels decided to make nests out of it, and there were acorns mixed in it. So,
oh my goodness, that's hilarious.
It was amazing. So I highly recommend that. And then having appraisals done, just to make sure that you have proper insurance. From a replacement value standpoint, if something like that does happen, at least you won't, you'll be able to replace your collection. So that's one of the most important things that I think people, they get so caught up in how much can I buy this for? And how much is it going to be worth? And what's the score? And all these things, they forget about that you actually have to take care of it in a very meaningful way.
Right. Okay. Well, thank you so much, Brian. This was very enlightening. Thank you very much for sharing your knowledge and your time.
Thank you so much. I really enjoyed it. I appreciate it.
Thanks so much for listening to my conversation with Brian Ward. We hope you learned a little bit about wine collecting and investing. And if you're interested in either, be sure to get in touch with Brian. If you didn't catch his deets, check out the show notes. You'll find them there. And because you listened this far, I have a special gift for you. 15% off your entire order at wine365.com. Use the code INVEST15 at checkout. That's INVEST15. Again, go to wine365.com. Use the code INVEST15 for 15% off your entire order. This info is also in the show notes. I'll be back again in about 2 weeks. In the meantime, remember, wine is food. It comes from a place. Enjoy it responsibly.